Everyone, welcome to a new video here at Sublime Traders. I'm Logical Orange, and in today's market update, the 7th February 2022, we are going to take a look at the whole market with fundamentals that are really messed up because we have the war going in Eastern Europe, and this can possibly affect the whole Europe and the whole world. And on the other side, we have the US that is trying to regulate crypto, with Jerome Powell saying that it needs to be regulated. These two fundamental news don't lead to anything but FUD. So in this case, we need to take a look at the technicals and analyze the market by its numbers. You know that in technical analysis, you can draw so many lines, resistances, trend lines, that one will eventually fit, So technical analysis isn't that exact as some people think it is. You have a lot of indicators, you have trend lines, you have supports, resistances that you can draw in different ways and that can lead to different conclusions. But in my case, I try to use the same things over and over again, and I get used to them. And after a while, I can get the same conclusions based on the same indicators. So I'm here on the daily chart on Bitcoin, and I have established my trend line supports, of course, and I'm using just a single indicator in this case, which is very important and which has helped me over the last period to identify trends and to stay out of bad trades. Because staying out of bad trades, guys, is extremely important. It prevents us from making losses. And I see a lot of people that are not taking the risk seriously and that are having issues with trading because risk is allowing traders to make mistake. So risk is important. Back to the daily chart, we can see here that we are in what looks like a triangle that is placed in a descending trend that we can see right here. This usually means that the price would have more chances to escape on the lower side. And on this graph right here, I have marked the potential breakpoints out of this formation right here. So we have on the lower side, we have the trend line that is obviously the point of escape of the price if we get pushed down. And if we are to head to the upper part of this formation, we would clearly need to pierce the Ichimoku cloud, the Kumo cloud, that is extremely thin right here. So as a general rule, the price needs to have a thin cloud in order to be able to pass through it. So that the Japanese cloud is an extremely interesting indicator, and that can be used on longer time frames, on shorter time frames. Scalpers use it on the 1 minute time frames. So it is an extremely important indicator that can basically tell you what you need at a single glance. You can also see that I have a conversion line in this chart. So the conversion line is part of the Ichimoku cloud indicator, and it indicates also trends. Once it's pierced through a cloud, it can indicate the fact that the price action can continue to go in that given direction. Right now, guys, we have the conversion line in the middle of the cloud, and this means that the market isn't ready to go anywhere right now, even though the price action is extremely close to the bottom of the triangle right here. So the support line right here, the support trend line right here. We are still not able to decide whether we should take a trade or not. I mean a long trade right here. So in this case, I would probably stay put and wait because, first of all, we didn't have the US market opening yet. So we need to wait some hours in order to see how S&P and the Nasdaq opens today, because we saw a correlation between Nasdaq and S&P with crypto. It is being correlated a lot recently. And after we get the opening, we get more candles, we get more information, and we can possibly get the peers of the conversion line through the cloud. This would be the first element that would say, okay, a long would be a good idea right here. And then what we do, we will set a stop loss, a potential stop loss, some take profits, and the final take profit, of course, not before. Right now, if you look at the chart, you would say, I'm longing here because we are near support and my risk is thin. So in this case, a simple trade that hasn't been researched properly would look like this. But I'm not going to take that trade, and I'm not going to tell you that this trade is doable because right now it is not. Right now the candle hasn't closed yet. We need to have more confirmation. So in this case, I'm not sure yet, but I still want to get some information before the market opens. Maybe I missed the best entry I can this week, okay? So let's go to the Heikin Ashi chart. Heikin Ashi chart, which is a mean candle type. It uses the average of the previous candles to plot the current candle. So right now, I can see that on the Heikin Ashi chart, I have full candles that are having wicks on the lower side. This means that the trend isn't over yet. On the Heikin Ashi chart, we can clearly see that when a trend is over, we have wicks on both sides with what we call a doji candle. A doji candle is an undecided candle. We have them on trend reversals, and they basically look like this one right here. This candle right here is a doji candle. This right here can be a doji candle because it has wicks on both sides. It has some more sell volume than buy volume, but it is still considered as a potential reversal candle. We also have a doji candle right here. It indicates the change of the trend, followed by another big candle right here. And you can see that basically on every trend change, we need to have a doji candle. Right now, we do not have this. In order to have this, we would need to open another candle, and we would need to range it on the normal type of chart, on the normal type of candle for a while in order for it to develop into a doji candle on the Heikin Ashi chart right here. So this means the trend is not over yet. On the other side, we have oscillators that are midway. This would mean that, well, basically we are undecided. So guys, for now, please stay away from trading. Just observe. This chart right here can spell disaster for the price of Bitcoin if it happens to feel the way that the pattern indicates it will. So I simplified this chart in order to show you a simple pattern that is showing on the 4-hour chart right here on Bitcoin. And you can probably already see it right now. I'm floating it in front of your eyes. We have the left shoulder, we have a head, and we have a right shoulder. And we have a neckline that is here. And what would the price do in this case? The most times this pattern happens in the normal form or in the inverse form, so inverse head and shoulders, it breaks as it is supposed to. So let's say about 70%. So if this pattern were to break out as expected, it would go probably, let's measure the high, the neckline. We take the high and the neckline and the potential breaking point. And this would be the price that we would see if we were to not hold this resistance line, this support line right here. So this part right here is what holds us from going all the way down to 30K. So 30K, guys. And I'm sure that if I plot a Fibonacci line, a Fibonacci retracement, I would get more or less a very important level right here. So this is, let's say, what is holding us right now from going to 30K. But when do we decide to short then? So if we have a short mindset, which is not bad right now given the conditions, however, fundamentally, it's still balanced, let's say, because we have good news, we have bad news. Well, if we want to short, there are several possibilities. Of course, the possible stop loss would need to be somewhere around here, higher than the right shoulder that we have. So this would mean higher than 40K. This would be a safe option for a stop loss for a potential short. And the entry should be just lower than the previous week that we had right here. So we just eliminate the possibility of a spike. So just a liquidation wick that goes down to liquidate positions and then back up into the formation. So potentially, let's plot this so it's clear for everyone. I would probably enter right here, and I would probably stop right here, and I will probably take profits all the way down. So multiple take profits. Of course, in order to determine take profits, I would need to have more information. I would need to have Fibonacci retracement. I would need to have some resistances and supports plotted, and so on and so forth. But this would be the potential short that we can take right here if we take this formation into consideration. So very simple. We have a head and shoulders formation. It can lead to 30K. How do we take advantage of it? And this is the way we do it. So in this part, I just want to get you to think a bit out of the box. Because we are trading crypto so much, we are sometimes not looking at what happens around us. We are just looking at Bitcoin, because basically if we are trading the top 10 coins or the other altcoins, we really need to know what Bitcoin does. So we take a long trade on or a short trade on an altcoin, and we look at Bitcoin, whether it's trending or ranging. However, in real stocks and in commodities, in order to make a trade, you really need to look around you or on what is happening around the world. So in this case, today I'm going to show you 3 commodities that can make you a lot of money still, because they are already overexposed. So I'm going to start with oil. Oil that has clearly pierced through the Ichimoku cloud on the daily. It had an ascending range right here, and we are now on what should normally look like an overexposed formation right here. But I assure you, it is not yet finished. With what is going on in the world right now, it has the possibilities to go to $150, $160, or even $170 per gallon only with oil. The second interesting asset that I want to show you, and most of you know about it, is gold. So gold also overexposed. Gold really has a inverse correlation with Bitcoin right now and with cryptocurrency, because both are what? Both are safe havens. Both are investments for long term that we really are meant to preserve fiat, so Euro USD fluctuation during this fundamental period that we are really living right now. So gold, also a very good investment opportunity, also a very good hedge opportunity. We also have gold in a crypto form. So we have PAX gold, which is a crypto which is pegged directly to gold. So the second asset would be gold. The third asset and derivatives that come from this are wheat. So wheat, every cereal commodity right now is exploding. All over the commodity communities, we hear about cereal investments, wheats, grains, all types of grains, coffee also looking very good. And this type of investment is also a very good opportunity if you are looking at commodities right now. So what can we also trade based on what we know? So we have three assets representing 3 categories. We have gold, we have oil, and we have wheat. Each and one of these, we have companies that are working in order to either produce them or produce assets or products that are related to them. So for example, for US oil, we can have any company that is selling oil. We can have Total, we can have Lukoil, we have a lot of companies. However, just be careful, because there are some companies that are backed by Russian capital and it can be affected right now. On gold side, we have companies that are working with gold, that are investing in gold. So investing in those are also interesting. On the cereal side, we have also crop products, crop related products. One example I gave last week, it's Marbon, I think it's Marbon, MBI, Marron Bio Innovations. Yes. So these guys are creating some type of bacteria that are used to treat cereal plantations naturally. So biologically, no chemicals, no stuff like that. And they are very, very low in terms of price right now. So if we look at the chart right here, we can see that we tried to pierce this descending trend line right here. I'm going to technicals back because this is what I usually do. So we tried to pierce this this formation right here. We didn't, because we had a very big push from the bears on the other side on the general market on Friday. But however, the price is really, really low. The company has registered only gains last year, and they will have the estimates in on the 30th of March, so the end of this month, which is really, really close. So we have 1 month in order to accumulate positions. So this is my overall view for now, guys, on the market. I talked a bit about stocks. I don't know if you guys are so into stocks, but you should be, because there is potential in stocks, especially in penny stocks that can grow very much like crypto. But all you need is to have an open mind and think outside the box. I also know that many of you came to trading through crypto, but you can learn new stuff. Why not? You know, if you guys like this video, please tell me, and I will try to focus more on stocks next time. And this is all for today. Thank you for watching. See you in the next video.